Today we are going to start with mutual funds. Okay, so what do you mean by mutual funds? Mutual funds is a pool of money. Okay, many users, let's suppose he's A, B, C, D, E, F. Okay, these many users put money in a certain pool. Okay, and to manage this money there is a person called as mutual funds manager. Okay, so what does he do? He manages the money here and he invests those money in NSE or BSE, okay, or bonds, okay, in stock market or bonds, okay, usually. Now what's happening here is that he's taking everyone's money and they need something, right? If you are investing something in a company, you need what? You need an acknowledgement, right? So that you have ownership proof. Okay, so what does the mutual funds give? They give them units. Okay, it can be in decimals also. Okay, what do you mean by decimals? Okay, 36.73, okay, whatever can be. So this mutual funds units are denoted, your share value is denoted by your market price, right? So here the mutual fund units are denoted by NAV. Okay, here mutual funds units are denoted by NAV. Okay, it can be in decimals. Okay, and yeah, this is the basic funda of mutual funds. Okay, so now we'll see the chapter. Okay, your mutual funds chapter is divided into 4 parts, which is the first one is your introduction to mutual funds, the second one is your NAV method, okay, and the third one is your returns from mutual fund, and the fourth one is other topics. Okay, so for exams, what is more important is your second and third part. Okay, majorly your second part is important and third part is important to some extent. Okay, the first part is just for your base building. Okay, it is not asked in exam, it is just for your base building. So what it is, we'll see. Meaning of mutual funds: investor can invest in securities directly in shares, debentures or bonds. Okay, directly in the stock market or indirectly through mutual funds. In our example we saw that everyone puts money in a pool and a portfolio manager invests on behalf of them. Okay, for that they get units of mutual fund. Okay, why do they invest in a mutual fund? Why do they invest through mutual fund? It is because if investor has no time or expert knowledge, wants diversification in less money. Okay, he doesn't have much money for diversification, so he invests in mutual funds so he can get diversification benefit. Mutual funds is a trust that collects investment from multiple investors through issue of units for the investment in securities. Okay, so this is not as per your module. Okay, as per your module it is very much easy that mutual funds collects money from investors and invests in stocks. Okay, but if you want some extravagant knowledge, so I'll tell you. Okay, a mutual fund is set up. Okay, an investor or unit holder are the beneficiaries of mutual fund. Okay, how it is set up? It is set up by a sponsor who appoints trustees, and trustee appoints an asset management company. Okay, your HDFC mutual fund, your Axis Bank mutual fund. Okay, these are what? These are your asset management company. Okay, and what does mutual fund do? It invests in securities. Okay, invest amount in mutual funds and get units for mutual fund against it. Okay, invest against mutual fund against it. Now this is quite important. Okay, you have to understand it really well. Okay, this will be good for your understanding, okay, of entire mutual fund chapter. What are the classification or types of mutual fund? Okay, so it is based on the following. Okay, how it is on the basis of structure. Okay, and it is further classified on the basis of investment portfolio and further divided into the basis of income plans. Okay, the first one is on the basis of structure. So how it is structured? First one is open-ended funds and close-ended funds. What is close-ended funds? We'll see. Okay, in close-ended funds, what do they do is that they issue a fixed number of units in the market. Okay, they issue a fixed number of units in the market, and it is traded, and the price of this mutual fund is derived by demand and supply. Okay, so if you see, it is quite similar to your shares, right? In shares, what we do, company issues a share in the market, limited number, okay, and then its value increases on the basis of demand and supply. Okay, so that's why in the market right now only open-ended funds are issued. Okay, means what, they put money in the mutual funds and in return they get units of mutual fund. Okay, this value is calculated by the mutual fund company, okay, by the portfolio manager or the mutual fund manager. Okay, this amount is calculated by the mutual fund manager, NAV amount. Okay, so what is the NAV amount? It is similar to a share market price. Okay, market price of the amount. Okay, and closed-ended funds, it is derived by your market forces. Okay, so in the current market only 1% will be in closed-ended funds, but majority is in open-ended funds only. Okay, next, on the basis of investment portfolio. So what is investment portfolio? It is that everyone has put money in the pool. Okay, in the pool of money everyone has put money. Okay, now it is up to the mutual fund manager that where should he invest. Should he invest in bonds? Should he invest in equity shares? Okay, should he invest in money market also? Okay, there is also a concept called as money market mutual funds. Okay, this you have read in your 12th standard, but we might have forgotten, but it is also possible. Okay, money market mutual funds is also there. Okay, so how does he invest in it? In our syllabus we just have three types. Okay, equity scheme, debt scheme and hybrid scheme. What is equity scheme? Purely on equity shares, and debt scheme means purely on debt securities, and hybrid scheme means mix of both these. Okay, next, on the basis of income plans. So how do we define it on the basis of income plans? There are four structure. Okay, what it is? The first one is dividend payout plan or regular income plan. Okay, so what does this say? Dividend payout plan. It means that after you get, that is the investor what he gets units. Okay, so let's suppose after 6 months or after 1 year he'll get regular payment of dividend. Okay, whatever is received by the mutual fund company in the form of dividend is distributed to the holders of the mutual fund, unit holders of mutual fund. Okay, so how much to give, that is how much percent to give. If they are receiving 10,000, how much to give it? 80%, 70% or full 100% is up to the mutual fund manager. Okay, so this is one type. Next type is dividend reinvestment plan. Means what? That you are the company, the mutual fund is receiving dividend from various companies, okay, or interest from various companies. Now what it is going to do is that it is not going to give it out in cash to the unit holders. Okay, so what it will do, it will not distribute it as cash, it will give dividend. Okay, it will reinvest that money. Okay, it will reinvest that dividend money into the mutual fund and give them units. Okay, and units are issued to unit holders. Okay, next, bonus plan. Dividend is not distributed to unit holders like your dividend reinvestment plan, but bonus units are issued to unit holders. Okay, so what do? Is that they get all the money but they give bonus. Okay, this part, dividend reinvestment plan, what happens is that they give the amount that is attributable to the unit holders entirely as units. Okay, here they give it as bonus units. Okay, that is the only difference. Next, growth plan. In growth plan, no bonus, no dividend, no reinvestment. Okay, what do? They take the money. Okay, they take the dividend amount, they keep it with them, they reinvest in securities. Okay, and when securities grow, their NAV also grows. Okay, so if NAV grows, that means what? In terms of shares, what it is, NAV means your share price, right? If your share price grows, the investor will be benefited. Okay, So this is known as growth fund. It is what the dividend amount which is they are getting, it is reinvested in the securities itself. Okay, and to increase in a with the motive to increase the net asset value of the mutual fund. Okay, so this was the basic thing. Okay, introduction part. Now we'll move on to our main part, which will be asked in exam. Okay, this is very much important. Based on this, your whole chapter is based. Okay, if you really solidify this part, this chapter will be very much easy for you. Okay, it will be in your fingertips. Okay, just understand the concepts. So what it is, we'll see. The first one is meaning of NAV, that is net asset value of mutual fund. What do you mean by NAV? NAV is the value of per unit of mutual fund held by the investor. Okay, so what does the investor get? The investor gets units for the money which they have invested in the mutual fund, right? So what is NAV? It is the value that unit is getting. Okay, so how is it calculated? It is calculated on daily basis. Okay, that unit is calculated on daily basis based on the stock prices. Okay, at the end of the day, let's suppose the stocks are valued at the market price. Okay, so we'll calculate at the end of each day at the closing price only. Okay, next, calculation of NAV of mutual fund. Okay, so how do we calculate NAV of mutual fund? You have to follow the following steps, just 2 steps. Okay, calculate NAV. First, what you need to do is that we need to calculate the net assets of mutual fund. Okay, how do we calculate it? Is it on book value? No. Since NAV is equal to your market price of security, so we'll do it as per the market value only. Okay, not book value but market value, not at cost but at market value. So how do we calculate it? First, market value of investment in securities. That is, if you have invested in shares, debentures, bonds, okay, money market, whatever it is. So end of the day, what is the value of mutual fund? Okay, what is the value of security? Okay, we take it and we multiply it with the number of shares held by the mutual fund. Okay, so we get an amount here. Next, any accrued income, that is your dividend or interest, that is accrued. Okay, that is accrued in the investment, okay, in the securities, that also we need to add. Okay, and add closing cash balance. Okay, minus what we do other accrued expenses. Okay, like your arrears of expenses, your expenses payable. Okay, this all we do minus. Next, we do other liabilities like your amount payable on shares, okay, etc. Now if you see all these expenses, so if you see this is the balance sheet of mutual fund. Okay, so here there is asset and here is liability. Okay, so what we are trying to do is we are trying to find the net assets. Okay, what is net assets? If you see in your accounts point of view, this will be your net asset, right? Okay, that is a net worth. Okay, or else what you can do, it is that your total assets minus your current liabilities, right? So that's what we are doing here. Okay, investment, accrued income, cash, okay, in asset side, that is a total liability, minus your accrued expenses, that is a current liability. Okay, this other liability, outstanding expenses, arrears of expenses, accrued expenses. Okay, so this is how we are doing. Okay, total assets minus your outstanding liability or current liability. Okay, or current liability, right? So this is what we are doing here. Okay, you just have to present it in the table format. You just have to remember these 4 points. Okay, what is accrued income, dividend accrued on shares, closing cash balance. Okay, now accrued expense, it is arrears of expenses, expense payable, or other liabilities, which is account payable on shares. Okay, amount payable on shares. Next, what we need to do, we will get net assets of mutual fund. Okay, so how do we divide? We do book value, right? How do we find book value per share? We take this amount, okay, net worth divided by number of shares, right? So like that, here also same only. Okay, this amount we get at net assets. Okay, net assets divided by total number of shares, total units. Okay, very much simple it is. Okay, number of net assets of mutual fund divided by number of units outstanding of mutual fund. Okay, it is as simple as this. Now this is very much easy, but do you think this is at the level of CA final? No. If it is in CA final, then it must have something good twist to it. Okay, so what it is, we'll see. Okay, now they might have not given closing cash balance. Okay, for we have to find closing cash balance. Okay, and there may be some other adjustments also. So what it is, we'll see one by one. So there are notes here. Okay, NAV and number of units should be taken in 2 decimals unless specifically mentioned. Okay, if it is in question, if it is not mentioned in question, then we have to take units as in decimals. Okay, since units are not like shares, okay, they can be issued in decimals also. So you have to keep that in mind. We have to calculate units in decimals only. If in question it is expressly mentioned that do not take units and all, then we will not take. Okay, or in question it is specifically mentioned that take 4 decimals, 3 decimals, we'll take up to that. Okay, now the second part is calculation of closing balance. Okay, if it is not given in question, if it is not given in question, if in question it is given cash in hand, okay, cash balance, closing cash balance, whatever is given in question, if it is given in the asset part of the question, then we will take directly. If it is not given in question, then we have to calculate. Okay, if it is given in question that cash in hand is this much and they have given various information related to cash, various adjustment related to cash, we will ignore that part and just take cash balance only. Okay, so how do we calculate the closing cash balance? We'll see. Okay, if it is not given in question, you have to keep this in mind. Okay, so first, amount received on issue of units. Okay, so you have to treat this as your cash ledger. Okay, whatever you get, you add, whatever goes from your hand, you minus it. Okay, so in cash balance, only real cash comes in and real cash goes out. Okay, your arrears of expenses is not calculated here. Okay, whatever settlement you do in cash comes here. Okay, so the first one is amount received on issue of units. You receive actual amount. Okay, minus your initial expenses to set up the mutual fund. Okay, to pay security transaction tax, whatever it is, you pay that amount. So this forms part of your initial expense. Okay, minus your initial investment in securities. Let's suppose you have bought some securities. Okay, worth, you have got investment of, let's suppose 50 lakhs. Okay, 50 lakhs, but you are only able to buy securities for 49 lakhs. Okay, so what will this extra amount? It will be our asset only, but it will remain in cash balance, right? So this amount can also be a part of, means whatever you receive from the unit holders, it is not necessary that every time you will invest it. Okay, some part will be uninvested, or you will find better opportunity, you will seek for better opportunity to invest. Okay, so some part may also be with you. Next, it is your amount received on sale of securities. Okay, let's suppose you have a portfolio of 50 lakhs. Okay, you have various securities, you have diversified it, you have 5 securities in it. Okay, now what is happening is that you are estimating that after 2 months this share price will fall down. Okay, so what you do, you sell it now and you buy it later. Okay, so till then what you do is that you sell that share. Okay, and for that 2 months period you do what, you invest that amount in any other fixed income security. Okay, so what you do, you sell some share. Okay, you sell some share and you buy, you purchase another security. Okay, so that difference amount will be in your cash balance, right? Next, income received on investment in securities, that is your dividend, interest received, whatever it is, you will be paid in cash, right? So that amount will also form part of your cash balance. Okay, next, minus realized earnings distributed to unit holders. Okay, now what is happening here is that you bought that share. Okay, which share? Let's suppose we had 50 lakhs worth of share. No, 50 lakhs worth of share. Okay, so one share was worth of 10 lakhs. Okay, you sold it. Okay, now you bought it for 10 lakhs, but its value on the market at that time was how much? 13 lakhs. Okay, so that 3 lakhs was your profit, right? That 10 lakhs you invested in another security, but that 3 lakhs was a capital gain. Okay, so that capital gain will also form part of your unit holders. Okay, so we will distribute that also in a dividend payout or regular income plan. We will give out that also. Okay, so what is realized earnings distributed to unit holders? It is your income or dividend income, that is your dividend or interest distributed, and your capital gains arising on sale of securities distributed. Okay, that gain, that 3 lakh gain you gained, you distributed with the shareholders. Okay, with the unit holders. Next, operating expenses paid, example your fund management expenses or any other expenses you might have, no, so that you will deduct it. Okay, next, amount received on issue of new units. Sometimes what you do, is it like that once 500 people have invested in the mutual fund, it is closed forever? No, right? People may come and go. Okay, anyone can join. Okay, so people, if they come, so what do? We receive an amount, okay, on the issue of new units. So what we do issue price into the units that we have given them. Okay, that amount we'll take. And next, minus amount paid on repurchase of unit. It is not like that if anyone has come into it in the mutual fund scheme, no one will take out the money. Okay, some will take out the money and cancel their mutual fund. Okay, so what will happen is that we will repurchase their units and issue that units to some other person. So this is redemption. Okay, so we will give them the money. Okay, so amount paid on repurchase of units will less it. Okay, now we have closing cash balance. Very much simple it is. If you apply logic here or accounts here, you will be able to understand it very well. Next, this is one case. Okay, next we have this two parts is specifically tested in your question number 11. Okay, it will form the basics of your question number 11. It will be used there. Okay, so what it is, we'll see. This is the basic funda of it. Okay, if you even do this much part, you will be able to solve the questions. This much part is extra, but I'll explain it to you for ease of solving of question. Okay, so what it is, we'll see. If details of assets and liabilities of the mutual fund are not given in question, okay, assets and liabilities are not given in question, but opening NAV is available, then closing NAV is calculated as follows. Okay, so how do we calculate closing NAV? We take net total assets minus your current liability. Okay, we have asset liability details in the question. If asset liability details is not given in the question and only opening NAV is given in the question, how do we calculate closing NAV? We'll see. Okay, so we'll take opening net assets of the mutual fund. That is, how do we take? We take it in amount. Okay, for ease of doing the sum. Okay, you can also take it in NAV, but this will be easier. Number of units at the opening date into your opening NAV, plus or minus investment portfolio appreciated. Okay, so they would have been given in question that the investment portfolio has appreciated by this much. Okay, so appreciate means what? Extra, it has grown. Okay, so that amount will take. Okay, appreciated or depreciated, whatever the case may be. Next, amount received on issue of new units. Okay, so this amount will be added. Amount paid on repurchase of units will less it. Okay, next, income earned. What we are doing here is that we are finding cash balance only. Okay, this is basically that only. Okay, only this part will be your balance sheet item, rest this all is your cash item only, right? Next, income earned during the period, income distributed to unit holders. This also forms part of your cash balance only. Okay, income received from sale of securities minus amount paid on purchase of securities. Okay, this also. So it is what? It is your cash balance plus your investment value minus many things that can be. Okay, your operating expenses paid, your accrued expenses, your arrears of expenses, whatever the case may be. But this, it is formed by this. Okay, it is formed by using closing cash balance only. Okay, you just need to understand the balance sheet well. Next, how do we calculate closing NAV? It is simply your closing net assets of mutual fund divided by closing number of units outstanding. Okay. Now, issue price and repurchase price of mutual fund. How do we do it? Okay. So, how do you calculate issue price? In the earlier parts we saw that we calculate issue price, we calculate repurchase price. Okay. But how will that amount be derived? So we'll see. Issue price per unit, that is your public offer price. Okay. So how do we calculate it? It is NAV on the date of issue of funds, issue of units, okay, and plus entry load, okay, front end load. That is, the mutual fund takes some amount from the mutual funds, okay, mutual fund investors, okay, as an entry load, okay, that they want to come into your mutual fund. But this entry load amount is not practically practiced today in today's date. Okay, only exit load is charged. That is, whenever the mutual fund holder withdraws the money, then exit load is charged. But entry load is very rarely done. Okay, still in some questions of ICI we have, so that's why we are learning it. What is dividend equalization? Okay, it is added. Okay, so what it is, we'll see. Okay, and here also it is added, what we'll see. Okay, so how do we calculate dividend equalization per unit? Okay, we'll prepare a statement first. Okay, how do we calculate it? We'll see this in a question only. Okay, this dividend equalization also I'll explain it to you in the question only. Okay, so for now we'll not do it. Okay, when I'll discuss question number 11, I'll explain it to you very well. Okay, till then, tata, bye bye. In next lecture we will see questions of mutual fund of NAV. Okay, so till then, tata, bye bye.